Hello, everyone. This is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, July 25th. We are now in the final hour of the market. As I mention every day, I believe that the closing prices of the day in the market are the most valid prices to make your buying and selling decisions from for your entries and your exits. Because in my opinion, that is the time where the market makers and the large institutional financial firms take over the market and move the market to really where the most valid price of the day. So I really feel like the closing price of the day is the most valid price of the day. That is why so many trading approaches are based upon the closing price of the day, because it all circles back to that being the most valid price. So anyway, we are having an interesting day. It is a red day in the market. It is a red day for me. Currently, the Dow's down 154 points. So pretty big down move. The NASDAQ is down 74 points. So that is a large move also. 0.9% of a percent. The S&P is down 15, almost 16 now. Down about 0.5%. So we are seeing some selling today. So we're going to have to keep that in mind when we take a look at my current positions and figure out what we're going to do with them at the end of the day. We do have a large earnings day after the close today with Amazon, Alphabet, Intel. What else do we have? We have Starbucks. So especially Alphabet, Intel, and Amazon are obviously large cap stocks. They're going to have an effect on the market. I personally don't get in front of any earnings. It's a good way to actually lose a lot of money very, very quickly. Steve Burns says the one thing that you can do to avoid huge losses is not getting in front of earnings. So there's a way to play stocks after they have earnings, but to gamble right in front of them is probably not a good policy. All right, let me just see if everyone can hear me okay. Hey, it looks like we can. Hey, William's here. Hi, William. Nice to see you. How are things going in, I think, Hawaii, right? And then JT is here. Hi, JT. How are you doing? What's going on? So I hope everyone's staying safe out there in this market today. I do want to mention that, we've been making new highs lately. Trading's been profitable. This is always good, right? But I don't want you to get conditioned to where you feel like this happens all the time. I'm not trying to be a bear here, but there will be a time where we have a sustained down move, and in those situations, the goal is preservation of capital, not making capital. And buying the dips has been working for a long time. There's going to be a time when that is not the case, and that is when traders become destabilized. There's a certain dollar amount that each of us have where we're okay with that kind of loss, but when it goes $1 over that, then the reptilian mind starts taking over. And really, that is where people make the worst decisions. And when I say worst decisions, they're like, okay, instead of a full 10% position size, I'm going to take a 20% position size. And when that goes down, they take a 30% position size, because they're conditioned that the market always comes back. So I really do want to counsel you and warn you to stick to your trading plan, even when things are going against you, even when you're taking good trades, but they are, whipsawing against you, stopping you out over and over and over again. Of course, it's super frustrating. I completely understand this. I've been through this so many times, I can't even count. But the best advice I can give you is when that type of market comes, and it's going to come, I promise you, stick to your plan. Don't double up on things. don't go all in on a position. Going in all in on a position is like the worst thing you can do. When you're like, that's it, I'm in 100% of my account, can't go any lower. That is how people get wiped out. So, please kind of rise above this. When you feel that feeling where you're becoming destabilized, take a break. You don't have to trade every day, or instead of a 10% position size, cut it down to a 0.5%, a 5% position size, or maybe even a quarter, 2.5% position size. Because the ones that come out of these big down moves are the traders that were able to hold it together, and enter that next trade that might be a monster trade, just like we had back in June, right? May was horrible, June was great, but I had a down month in May, but I still took my positions in June, where I made it all back and more. But if I would have doubled and tripled up my positions in May, I probably wouldn't just had it in me to take those trades. So, it's important. All right. So anyway, I hope that helps. I do just want to kind of warn you about that. So hi, Johnny. Good to see you, my friend. Thank you for coming by. Appreciate it. Okay. So the plan for today, first thing, we're going to run the U.S. legal disclaimer. Second, we're going to come back and we are going to go through my positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them moving forward, either to the upside or to the downside. Then we're going to do a few minutes on trader psychology. And then after that, we're going to go down through my watch list. We're going to go through each stock. We're going to take a look at all the support and resistance levels. We're going to look and see where we think buyers might be coming in, and I gauge that off of moving averages, RSI levels, MACD, ATR channels, and we'll see if we can find a confluence of indicators that line up, that telling us that this is possibly where buyers are going to be coming in. Because big picture, when you think about trading, you want to enter in when other people are entering in, right? I mean, it makes sense. You don't want to be entering in when people are exiting, right? You want to be entering into a level where other buyers are coming in as well. I mean, it's very simple. Buying creates the stock to go up, selling creates the stock to go down. So, I mean, I know that's like super simple, but sometimes people don't think about that. Think about where other buyers are going to be getting interested in the stock, so at least you're in the same company as people that are buying. So, when you have a multitude of indicators lining up, the way I look at it is, okay, here's a moving average. We had a V1. There's buyers here. RSI still at 50. Buyers might be coming in here. MACD just went positive. That's going to trigger other buyers. And when you get a trade set up where you have, multiple signals, multiple groups of people coming in to buy, that's where you want to be. So, all right, I hope that makes sense. So let's go ahead and run the U.S. legal disclaimer, and then I'll be back in about 40 seconds. So please hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okie dokie. Hey, Dr. Jorgensen's here. How you doing? Take a look at Viacom, V-I-A-B. Well, let's look real quick. Yeah, well, we had a big move up yesterday. Today we went up. We've now triggered a V1 to the downside. We are painting a triangle, which means we had a high, we made a higher high in reverse. This is negative. However, tomorrow, if we can close above this high, we will confirm this. So essentially you have a move up, you have a higher high, but it reverses. That is negative. However, if it's strong enough to take out that previous day's high again, then you have a negative action that's immediately followed by a positive action. That looks pretty good. Let's look at the weekly. The weekly's right there at the 1 ATR channel. We do have this big bar before it. This is kind of a common theme on a lot of stocks right now. You have this big bar prior to it, which means there was a lot of selling. So that's something to be concerned about. So I definitely wouldn't buy it here, although it is holding the moving averages, but I would like to see some upward movement first. This is kind of just an anticipatory trade where it's coming down and you're just saying to yourself, well, I think it will hold that 10 and that 20. Right? I mean, you can get some good rewards that way, but I prefer to let a stock I prefer that a stock lets me know that it's moving in the direction that I want it to before I take it. So, hey, Mount Doji's here. Good to see you. Thanks for coming, my friend. Hey, Steve Burns. Hey, buddy. How you doing? Good to see you, Steve. Always so nice to have Steve in the chat room. I'm always excited when you're here, and I think everyone else is too. Basically having a living legend in my mind join our group. It's always an honor. Steve says, chart patterns are visual images of the levels where buyers and sellers are located. Uptrends come from accumulation and downtrends happen when a market is under distribution. Yeah, that's exactly right. And that's exactly how I look at the market. When I look at moving averages and other visual technical indicators, I don't look at them as just lines. I literally look at them as groups of buyers or groups of sellers. So, try that out in your head. Look at those moving averages, look at the RSI levels, look at positive MACD crossovers, volume. Look at those as groups of buyers or sellers. I've done this for years and years where I've had that thought in my mind, and it really does help. All right, well, let's take a look. Yeah, it's kind of a bummer. It's a down day today, but again, losses happen, and that's why I mentioned haven't been a lot of losses lately, so it's going to be a new experience when you have losses. I'm not trying to be negative. I'm just trying to be realistic here, folks. So, all right, we did buy CVS back here on the 23rd of July. We did, we had this big move up. We moved down, we moved down, we moved down, up, down, a little sidewards. Then we triggered this V1 right here. V1 is where you have day 1 and day 2. Day 2 goes below day 1, immediately reverses. This lets you know that the market did not like the prices down here. So if you're going to buy something, it's nice to know in the very recent past that the market already tested it and didn't like it. On top of that, on top of confirming the V1 right here, it also closed above the 5 and the 10. Closed above the 50 RSI. So, this all looked good. Yesterday, we went down, reversed all the way back up, which is positive. Now today, we're struggling. We're at a 51.78 RSI. We are negative on the trade. This was the washout bar. This is the day that washed that bar out. My approach with V1s, V2s is if we have a close below halfway of this bar, because we went from here up to here, there should be some inherent support, Fibonacci support here at the 50 RSI. You can see we tested it earlier today. It has bounced off of that. So if we close under 55.22, if we close under the halfway of this V1 washout bar, I'm going to go ahead, just take the small loss, right? I mean, it's not fun to have a loss, but it's part of trading, and you just have to move on with it. Our potential move to the upside, we had a good risk to reward. I mean, somewhere in this range for the loss, possibly theoretically somewhere in this range for the move, right? So just because you have a good risk to reward doesn't mean that it's going to go your way, but you at the very least have to have an outsized move for your profits and a small loss for your losses. So I'll be keying off of the 55.22 level today. I can't put a market on closing here because it's going to be too close. So I'll have to manage this at the end of the day and make the decision right at the end. But if it does hold the halfway of this bar, I am going to keep it. You know, my ultimate profit target up here is 59.20. That's the 70 RSI. The orange line here is a bit of a red flag because that's halfway of this bar here, kind of close to the third ATR channel. So as it moves up, you know, I'm always looking for red flags to get out. This is my if it just went straight up, that's easy. Just gets up to the 70, you know, if it rejected, I'd get out. But, you know, trading is not that easy. You have to look at it every day and see if it's, you know, if it has some kind of, if there are some kind of red flags. And I mean, if we rejected the halfway here, I would certainly consider that a red flag and take off my position. If we rejected the 70 RSI up here, that would be a red flag. I'd exit the position. If we start extending away, having a nice move up, and then we close below the previous day's low, that would be a red flag, and I would get out there. So, you know, the entries are more, for me, they're more by the numbers. They're more paint by the numbers. They're more mechanical. They're black and white. But the exit is where the artistic part of trading comes in. So anyway, so we are down on this today. This was a full position. But as long as it stays above the halfway of the washout bar on this V1, I will keep it. And if it closes below, we'll get out. All right, IBB is another stinker today, unfortunately. We did enter this yesterday on the 24th. We had this move down, sideways, 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 building a good base. We came down yesterday, rejected all of this area back down here, closed back above, triggered the V1. At the same time, we closed back above the 50. We closed back inside of the channel. So, you know, I had hopes for this trade, but again, having hopes doesn't do anything. You know, this did look like a good setup to me with the technicals, but just because it looks good doesn't mean it's going to go up. And so, again, this was a V1. Here's day one, day two. We wash out day ones by a long way. We reverse back up. We close back up. That's the trade. That's the trade I'm supposed to take and also close above the 50. But again, my stop is a halfway of the washout bar, and the halfway here is approximately 104.91. This certainly looks like it's going to close below it. So I'm going to have to go out and just take a loss on this position. But, you know, as I've mentioned several times, congratulate yourself when you do what you're supposed to do. If it moves up, people congratulate you. Yeah, that's great, right? And that's nice. Don't get me wrong. But what you should really be congratulated on, everybody, is when you get out when you're supposed to. You know, even on your losing trades, try to take something positive away from it, that you did what you were supposed to do. You were a risk manager. I'm managing risk. It did not go my way. Remember, when it goes against you, most people become hopeful. They hope it's going to come back. When it goes up, they become fearful because they have a profit. Switch your thinking around. When it goes against you, become fearful. When it goes up, keep an open mind and stay hopeful. That's the key, not the other way around. So anyway, it closed under 149.91 today. I will be getting out. IWM. All right, so this is a mechanical trade. The previous two were discretionary trades. This is a mechanical trade based upon the 10 SMA closing above the 50 SMA. This is a good long-term, back-tested crossover approach to trending the Russell 2000, which is the IWM. I did enter back here on the 28th of June when we had the 1050 cross. And when I entered this, I was either going to phase out until I ran out of shares, or I was going to get out for a loss when the 10 crossed below the 50. So mechanical, like a robot trade, no discretion, no red flags. But when I did buy this, I bought a half a position. And the reason why it was over the second ATR channel, I felt like the rubber band was pulled a little tight. We had had 2 strong days going up into it. So instead of buying a full position here, I bought a half position. The next day it gapped up. I got out of about 25 of that position, 25% of that position. It's been moving sideways, sideways, sideways. I did hit a few profit targets, got out of about 50% of my position, right? We had 25 here, and then I also scaled out here. But then I re-entered the second half of my position back 2 days ago on July 23rd, because we were still under the crossover. And in my experience, when you're still under the crossover and you have a pullback and it lines up inside the channel and you have some kind of entry signal, I have found that is a good place to re-enter. So I went ahead and purchased the second half of the position, because I only purchased half here. I purchased the second half here back on July 23rd, which obviously was a good idea. It was based upon this V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 close above day 1. Yesterday we had a huge move up. I got out of about 30% of the larger position, which was nice. Today, however, it's given a lot of that back, right? This is an ugly day. But again, I feel better about it because I phased and I phased and I phased out at higher levels. Now, if this were a discretionary trade, I would probably get out of this trade because it doesn't look like it's holding the halfway of this bar. But again, this is a mechanical trade. So no red flags. I've just stay with it as long as the 10 closes above the 50-day moving average. And phase out if it continues to go up. If the 10 crosses below, I'm just going to get out. So anyway, that's the plan here. I am positive on the trade because of the adding the second half here and the phasing out and all that kind of stuff. So far it's been a profitable trade, and we'll just see where it takes us. All right, finally a little green today, little bit. I did buy Oracle yesterday on the 24th of July, and the reason I bought it is because we had this big strong move. We came back down into the value zone. We had a dip into the value zone, which is totally to be expected. We stopped going down. We finally started moving sideways, sideways, sideways. We did have a V1 here yesterday. It wasn't a great V1, but what I liked is it poked its head under the 1 ATR channel and then triggered the V1 because it closed above the previous day's close. In addition to that, it closed above all the moving averages, which I really liked as well. So it did move up for us today. It is green a little bit, which is showing some good relative strength compared to the rest of the market. Did hit one profit target up here today at 58.46, so I took off about 12% of the position, which is nice because even if we go back down, at least that little profit target there is going to pay for a boatload of commissions. And you know, commissions are a big part of your profit at the end of the year. They can be up to 20-25% of your profit. So you know, I always think about that as well, and that's another reason why I like to take my little phase outs, because it pays for a whole lot of commission. So today it moved up, hit the profit target, came back down. It's close to triggering a V1. So how am I going to manage this trade at the moment? Well, this was the washout day. Halfway of the washout day is right here. That lines up nicely with the 20-day EMA, moving average. So at this point, I'm going to keep this. It has not moved enough away from my entry in order for me to start to trail it. So my initial stop loss is still in place here. I will keep this as long as it holds above the 20 EMA. If we start moving further and further up, then I will look for other trailing stops. But at this point, it hasn't moved enough for me to do that. So that is Oracle. Okay, SPY. So as you all know, I do buy the SPY each day at the close, and I sell it first thing in the morning, and I do that every day, and I'll get to why I do that in a minute. But we did buy the SPY yesterday right here at 301.44, and I sold it first thing in the morning at 397. So this was a losing trade. We've had 2 losing days in a row. We bought here, sold here, bought here, sold here. On the bright side, I am glad that we got out right at the top because we've sold off quite a bit. But I will be buying this again at the end of the day quickly in case we have some new viewers. This is from Liz Ann Saunders at Bespoke Invest on Twitter. But you know, you have 2 options here. One, you buy the SPY at the open each morning and you sell it at the close in the afternoon each day. If you would have done this each day from 1993, you would have actually returned a negative 13.9%. However, if you did the opposite like I do and you buy the SPY each day at the close and sell it first thing the next morning, you would have actually returned 634.2% since 1993. So this shows you that all of the gains from the S&P since 1993 have come in the after hours and the pre-market, and then they are sold into at the open of the market. So, you know, it's great information to have. It literally shows you that by holding overnight, there actually is an edge in holding overnight. You can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, or buy in the morning, sell in the afternoon. There's just, the movement does not come during the day. It comes from after hours. So, you know, this has a powerful edge over time, at least up until this date. But you do have drawdown. So this is a everyday trade for me with a small position size because I know that we can go through substantial drawdowns. You know, in the long term, this has proven to work. Who knows, from here on out, it may never work again. I don't know, but I'd rather base my trades off something that has worked in the past than nothing, right? So I will buy this again at the end of the day here. Again, you know, look at it as the glass is half full. We lost, yes, but we lost a lot less than holding it. Excuse me. Lastly, this is my one and only put position. I do like to sell puts, but when I sell puts, I like to look at my strike price that I sold the puts at on 3 different time frames. And I chose the $122 mark based upon the monthly because we have the -1 ATR channel below it, and it did hold support. It did last time this was about the lowest it went. Then on the weekly, the $122 mark does line up just exactly with the 3rd ATR channel. So again, looking here, I look at this as like there should be some buyers here. On the monthly, there should be some buyers coming in here. On the daily, the $122 mark lines up nicely back with the previous low we had back in December. You know, there should be some support there. Not for sure, right? This is all theoretical, but the $122 mark does line up on the monthly, the weekly, and the daily with some kind of area that should have some buyers coming into it. So as long as this stock stays above 122 by next Friday, I will be able to keep all the premium, and that is the goal when I'm selling puts. I've almost got 80% of the premium. I have an order in today. I might be getting out with 80% of my premium today if it feels. But anyway, this one's working nicely. I've had a really good year with selling options. So that is it. So just real quick, CVS, if it stays over 55.22, I'm going to keep that. IBB, definitely look like we're going to get out of this if we have a close under 104.91. IWM, just going to hold this. This is a mechanical trade. Oracle, I'm holding this currently unless it closes back under 57.76. And then SPY, we're going to buy that at the end of the day. All right. Murat's here. Hey, good to see you, Murat. All right. Quickly, before we get on to other things, I did find a post here from Adam Mancini at Adam Mancini 4. He posts some really good information, good things on trader psychology. You know, I'm such a huge fan of all things trader psychology because it makes such a difference in you being a losing trader or a winning trader. I think it has everything to do with that ultimately. So I did read this, it did resonate with me, and so I did want to share this with you. For new traders, it's important to remember trading is hard, and it takes years of hard work and sacrifice to learn. It's a slow, long-term way to make money. Anyone promising anything different probably isn't being honest with you and likely has their own interest in mind. Oh boy, is that true, right? Trading is hard. It's freaking hard. It's a grind. There's ups, there's downs. It's a very difficult way to make an easy living. But, you know, we all do it. We all like it. But the goal obviously is to make money. But, you know, don't think when you just come into trading that it's just going to be easy. Think about it as going to be hard because it is hard and it's a skill and you have to learn it and you have to deal with your emotions. And so it is not an easy thing to do, but if you take the mindset that it's a slow, long-term way of making money, put yourself in that headspace, and that way you'll be in it for the long term. Because remember, in order to develop a skill, you have to have experience. In order to have experience, you have to trade every day. But if you blow up your account and lose your money, you're not going to be trading, and therefore you're not going to get the experience, and therefore you're not going to learn the skill. And then the second part, anyone promising anything differently probably isn't being honest with you and likely has their own interest in mind. Oh man, I mean, when I see the ads out for all these trading things, making all this money and Lambos and all this stuff, I mean, I literally want to throw up because it's not like that. In order to make a huge amount of money, you have to have a huge amount of risk if you're trying to do it in the short term. So if you're trying to get rich quick, which a lot of these sites that I see, that's kind of what they're promising. I mean, obviously they have their own interest in mind, right? This is a slow process that takes years to develop. So please keep that in mind and, you know, be careful about paying money for something that promises you big returns. I mean, it just doesn't work. So anyway, thanks to Adam Mancini for that, at Adam Mancini 4 on Twitter. It's a good page to follow, so I recommend following it and reading his stuff. So anyway, I hope that helps. Okay, so let's go down, see if there's anything for today. All right, so Apple is having a bit of a down day today. Has earnings next week. I'm sure it's going to be affected by Amazon and Alphabet today. It's just too high here. As I mentioned about every day, I need this to come back into the value zone in order for me to get a reset on this particular trade. Silver, kind of a big day today to the downside. Did gap down. Looks like there's some pretty big volume there. You know, we were stretching the rubber band pretty tight up here at the 6 ATR channel. So there is nothing today. I'm going to need either a 520 to cross under and then back over, or possibly get back into the value zone, look for some kind of V1, V2. We did take a nice mechanical trade back here on July 10th when the 5 EMA crossed over the 20 EMA. It was a very simple trade. I know that that's a good long-term back-tested approach to trading silver or AGQ. You get in when the 5 crosses over the 20 on a closing basis. You get out when it closes under. It's going to lose more times than it's going to win, but sometimes you're going to have a really nice big trade that's going to pay for all those losers and more. We did buy it here. This was a real trade, and we scaled out all the way to here until I ran out of shares. So anyway, that was a great trade, but nothing on silver today. Okay, advanced micro devices. Really nothing on advanced micro devices. Again, I need some kind of trigger back in the value zone. Amazon, big day today. As far as with the earnings, we had a big up day yesterday. Here it looks like we did test the halfway mark and close, which is good. But again, we have earnings, so maybe there'll be some kind of opportunity for us after earnings, but I definitely don't want to get in front of earnings today. Boeing. Well, well, well. You know, it closed under the 200-day yesterday. If you were long this stock and you didn't get out with your stop, boy, you paid for it today. We're at a 41 RSI. We do have a double bottom. It looks like we do working on some kind of bullish divergence. So you know, if this got, you know, ultimately, really the sweet spot for me is if we got down here to this third ATR channel and we had a very low 30 RSI reading, that would be a good place to, a good sweet spot to enter this trade. We did enter back here on the 12th, above the 200. We entered a half position, but it immediately closed below. So we did take a loss. We didn't get back in for this, but it's fine, right? Small losses are allowed. Small losses are allowed in the profit equation. You just can't have large losses. So glad I didn't get involved with this. You can see it did hit the third ATR channel. Okay, how are we doing on time? I better hustle. Alibaba. Too high, nothing on Alibaba. Caterpillar had earnings yesterday, went down, reversed back up. Update today back in the value zone, but there's really nothing here. DDM, well, we're finally coming back into the value zone. We're finally coming back into a place where we may get interested. Up here, it was just too extended. You know, everything seemed awesome up here, but that's really not the place to buy. So I am looking, we're back in the value zone, so we got to keep this on the radar. We did have a nice trade back here where we closed under, back over the 200. If we were wrong, we would get out with the close under the 200 for a small loss. If we're right, like we were, we phase out, phase out, phase out, and I think I phased out all the way up to here. Walt Disney is bucking the trend. I do like this in that we went up, we moved into the value zone, we moved sideways, but no trigger. There's really no trigger for me. And, you know, that gets frustrating because everything else lined up. But if you're following your trading plan, you need a trigger. So if you guys have Walt Disney, I hope that keeps going up. But if that goes up, I think I'm going to have to miss that one. Here's a trigger we took with the V2, day 1, day 2, day 3. Day 2 washes out day 1, closes above day 1. This is a legitimate trigger, and this was a great trade for us. We phased out up to here. Etsy. So there is nothing there today on Etsy. We did buy here on this V2 when we came back into the value zone. We phased. I believe I got out right here. This was a nice trade. It closed under the previous high, so it was a red flag. Looks like today it is going to close above there, but it's fine. It's already gone. We've already locked in the trade, but it was a nice trade. Ford Motor Company, again, guys, reason to not get in front of earnings, down a mere 7% today. It did reject the 100-day and it did reject the 30 ATR channel, which is good. But when you get these big down bars like this, it's like throwing a big boulder in the water. There's all sorts of commotion with the water. I want the water to calm down before I think about getting in this. There's just too much volatility. But again, reason why not to get into earnings. Facebook. Well, Facebook had earnings. I think it was up $4 or $5 or $6 yesterday and after hours. But for some reason, things changed and now we are down $4. So again, another reason, another example of getting out in front of earnings because you never know what's going to happen. They had great earnings, but yet the stock's down. So nothing there. Five Below, you know, Five Below does look a little interesting to me, not right this second, but we make this low, we have a rally, we come back down. See how we've kind of made this flat bottom here. We did poke our head under the 200. You know, if this closed above the 200, it would be legitimate closing back into the value zone as well. You know, this is a bit interesting to me. But probably the proper way to approach this would be see if we could get a V2 tomorrow. I mean, you could buy here on an anticipatory trade because we went under the 200 back over, under the channel back over. It's not bad. I just prefer to have that V1, or if we closed under and back over. But so this is an interesting trade. We'll watch it. I'll watch it for tomorrow. So, but I think I'm going to pass today. Gold, we are back into the value zone. Now I'm just waiting for some sideways movement. I'm waiting for a V1 trigger. We had a great trade back on gold here when we had the 5 cross over the 20 EMA mechanical approach. Took out the fractal, happened in the value zone, and it went up. And the reason I show you these trades, guys, is one, because they're real trades, they're real life trades. And I just want to show you that when you have good setups, you do have potential to make good profits. But gold's getting interesting again. Google, about flat. We have earnings, so we have to stay away from that. Goldman Sachs is down above the channel, the third ATR channel down below, so nothing there. IBB is definitely our stinker for today, but on the positive side, I took a half position because we're under the 200. So try to look at the positives of each trade, right? Definitely better to have a half than a full. Intel has earnings today as well. Russell, we talked about that. Big day up, big day down yesterday. Johnson & Johnson's my put. That's moving up nicely. We went from under 30 back over 30 back into the channel. This is good. I'm kind of interested in buying this, but I would like to see this move back down, go up higher, move back down, and get a V1, V2 before I enter. Coca-Cola had that big day up. I think Johnny sold that, so I'm glad to hear that because we've been down, down, down ever since. Do want to point out that we did test the low of the gap up day, and it did hold today, which is good. That is positive, but for me to get interested here, back into the value zone. Lockheed Martin had earnings, went up, went down, up, up, up. It's just too high. MasterCard is just moving sideways, nothing there. Merck did trigger that fractal today. I prefer the fractals when they close above the fractal level, so nothing there. Microsoft is down. It's just staying in the range of this big old bar here, so nothing there. Netflix having another big day today, but I definitely would not be buying it here. I mean, I considered it yesterday for a little bit, but I just felt like any rallies are going to get sold into, and so if I didn't buy it yesterday, I'm certainly not going to buy it today. I'm sure it's going to have some issues up in this range. Nike did come into the value zone, did create a little V2 here. I didn't take it because of the gap, but it looks like that is moving up. So, it's decent, but nothing there today. Philip Morris had that big gap up. Same with Coca-Cola. We came down and tested the low of the gap up day. Well, not quite, but pretty close. But still too high for me to buy there. PayPal, again, had earnings, was way down earlier in the day. Must have been down, I don't know, 6-7%. Now it's only down 4.73. Did reject the 50-day, which is positive. But again, big rock thrown into the water. Lots of volatility probably for a while. I'm not going to do anything with PayPal. The Q's down today. We did have a false breakout to the upside yesterday. See, here's the high of the new old range. We broke out, and now it looks like we're going to close back in. So this is considered a false breakout to the upside, but nothing there. Snapchat had big earnings. Here's an example of earnings that really did go, but I certainly can't touch that up there. SPY, we're going to buy that at the end of the day. Square, we were looking for this to come back into the value zone, look for a V1, V2, but it's not quite there. It did trigger a V2 2 days ago, but it was too high of a level. So we're just going to have to put that on hold, wait for a better setup. I really like to show this setup because it's such a beautiful confluence of signals where you have a low, you have a rally, you make a lower low. The MACD bars, the momentum bars, the momentum was very strong to the downside. We rallied, we came back, we went lower than the previous low. But that second move, although it looks strong, the MACD momentum was much less than the previous, that's a good sign, but then you need a trigger. Well, here's your trigger. Here's a V2, day 1, day 2, day 3, day 2, washes out day 1, day 3, closes above day 1, close back into the old range. So this is a false breakout to the downside, close back into the value zone, into the channel. That's also positive. This was a really nice trade. We phased out all the way up into about here, but nothing there today. SSO is the double leverage S&P. We came into the value zone, no trigger, so nothing there. This is a nice example of a different type of trade where during this day we went under the 30 RSI, closed above, went under the third ATR channel, closed above. This is the kind of trades that I've been taking on VIX. The two last VIX trades I've taken have not worked out, but you can see sometimes they really do work out, and we phased out. We took this trade, we went long here and phased out all the way to right up about here, if I remember correctly. Treasuries, nothing there today. We bounced off there. If we triggered a V1 here, that might be interesting tomorrow, but nothing today. Tesla, again, earnings down 13.3% on earnings. So, if you gambled on earnings up here, you're not too happy about it today. Yeah. So anyway, nothing on Tesla today. Twitter. Well, today Twitter looks like it's going to confirm a false breakout to the upside. We broke out of that previous high there and reversed back in. So this is a false breakout. It tried and it failed. So, that is a bearish sign. We have earnings coming up. Not like I would short this just because of that, but nothing there today. Natural gas is just kind of all over the place. United Healthcare did have that big reversal yesterday back into the value zone. Tested the 200 intraday, didn't like it back. So what I'd like to see another down day, maybe test that 50 and then a break back above the 200, having a higher low break back. That would be a good entry, but nothing today. USO is oil, nothing there. The dollar, very strong. Bullish engulfing candle to the upside. VIX, okay. Well, I had to get out yesterday because we lost the 30 RSI, unfortunately. So this was a bad trade. I entered here, had to exit here. It's a horrible trade, but at least on this particular trade, I took a quarter position. So that, again, pat yourself on the back for the good decisions that you made. I did not take a full position here. I took a quarter position here. Now, today we went under the 30 RSI. Yesterday we went under the 30 RSI. We went under the third ATR channel. Today we went above the third ATR channel. We went above the 30 RSI, and we triggered this sweet V2. So, and we have a bullish divergence. Here's a bottom. We have a rally. We have a lower low. Here's the depth of this first move. Here's the depth of this second move. Volume is huge. Does that mean I'm going to buy today? Yes, it does. I had 2 losing trades on VIX. And I know from a psychological standpoint, you're like, I don't want to take another loss. I've had 2 losses, but this is a legitimate trade, in my opinion. So I am going to go ahead. It's going to be a quarter position size again. It's going to be a small position size, but I will be buying this at the end of the day. If it closes under 22.10, I might reconsider because then it will untrigger the V1. But we have 3 signals here. Close under the 30 the previous day, close under the third ATR channel the previous day, closed above the 30 today, closed above the third ATR channel today, and created and triggered a valid V2. So I am going to be buying a 1/4 position today at the end of the day. Verizon, we did buy Verizon here when we confirmed this triangle. We did hit a profit target. And then we had to get out. But good thing we got out because the two following days were horrendous. We have rallied back. we have closed above the 200-day, but it's a lower low close above. I'd like to see it come back down, test it one more time, then go up. That would be the spot for me to pick on Verizon. Walmart, I added Walmart today. Move up strong. We had a dip. We're back in the value zone. We're moving sideways. This is really looking like it's going to set up for a nice V1 or V2, guys, if we have it, but we don't have it yet. But 2 of the 3 criteria have been fulfilled. Above the 1 ATR channel, back into the zone, moving sideways now. Now we just need a spike down, reversal. That will be our entry, but nothing today. Energy, big down day today, nothing there. We did buy energy back here on the 19th when we tested the 50 we tested the 50-day moving average and we triggered this V2. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. Is a valid V2, also tested under the channel, back over the channel. We rode that up, phased out. I did get out of this yesterday at the close to hit a couple profit targets, but got out at yesterday at the close because it rejected the 200-day. That was the red flag, and that was a good idea that I did that. Financials, high, too high, so, coming down a little bit today. If I get a V2 tomorrow with a higher low close back above the 50, I will enter real estate tomorrow because we have a low, we rally, we came back down. But if we can now form a V2 tomorrow with this higher low in place above the 50, I'll definitely be buying that, but nothing today. Utilities, nothing there. Healthcare, nothing there. I was considering buying this yesterday. Good thing I did not. All right, so what that leaves, I'm not going to buy 5, but I do want to point out that we did go under the 200 back over. We went under the channel. Looks like we're going to have back over. We tested this previous low, so this is technically right now a false breakout. So I'm not going to buy this because I'm just concerned about earnings with Apple and Amazon, but we'll see tomorrow. If we triggered a V1, that might be interesting. All right, so let's go back to my current positions and see what we need to do with them, because it's always important to deal with your current positions before you deal with anything else. All right, so as long as CVS closes above the halfway of this washout, the washout V1 here, I will keep this. IBB, that definitely looks like we're going to be getting rid of that. I have an order to sell all my positions, so we will be taking a loss on this half position because it was under the 200-day moving average. IWM, that's just our mechanical system, so the 10 is still above the 50. I'll be keeping that. Oracle, thank goodness it was up today, man. It was nice to have something up today, right? And then SPY, took a loss on that overnight trade. We'll be buying it again. Glad we're buying it a little lower. Here's an example of a trade that I did with Dr. Jorgensen. This was a nice profitable trade, more of a position trade. I think we bought it back here. But we had earnings today. We did exit the position here. This morning it gapped way up, but it gave it all back. And that's been the tendency, everyone, with earnings. They've gapped up and they've gotten sold into. They've gapped up and they've gotten sold into. Not all of them, but you've seen many of these. So I'm glad at least we did get out of 3M when we were supposed to. All right, so what do we have? We have about 6 minutes left. So we are going to kind of have to watch CVS here, but it does look okay. IBB, I have an order to sell that at the end of the day. Let me just make sure over there I do. Yes. IWM, yeah, we know about that. And then so Oracle's okay. And then buying our regular SPY position again at the end of the day. All right, that's it. So I think we're taken care of here. You know, if you guys have any questions or comments, just type them into the chat. I haven't been looking at the comments because I've been looking here at the screen. So, and then after the market closes, I'm very happy to address your comments or answer any questions that you have. Steve Burns says, the fastest way to lose your whole account is to try to get rich quickly by taking on too much risk. I mean, wiser words have never been spoken. If you try to get rich quickly, guys, you're going to go broke fast. Like with everything else, you try to lose weight really quick, that's not good. If you try to lose weight slowly over time, it's going to be better. Making money in the market takes time. It's a grind. Trading's a grind. And so just be okay with it and look at the long term, right? Grind it out, increase your position size as your account grows. M86, how you doing, M86? Thanks for coming by, appreciate it. All right, so, you know, McDonald's, we did have a nice move up, M86. We are starting to come into the value zone, which is the first criteria. But I need three criteria. I need us to make a higher high, coming nice uptrend, come back down into the value zone, moving sideward, showing that no more selling is taking place, and then look for a V1 or a V2 entry. I mean, this technically, if it closed above here, would be a V2. Here's day one, day two, day three. Day two washes out day one, but day three would need to close above day one. But this bar is larger than 1 ATR. I don't want to take a V2 with that. It's too high into the channel also. You know, the maximum I'm going to take a V1, V2 is right about here. This is a little too close. And we have that 1 ATR right there. We are going to find resistance. It's almost exactly where. So be patient on that one, M86. And we have earnings coming too. So it kind of takes it off my list. All right, so we got 3 minutes, and then I'll get back to the comments and questions. I just want to make sure because I have to manage these positions. All right, so far so good on CVS, although you never know. So I'm going to queue that up in case if it just wants to go down right at the last second. All right, IBB's loser today. That's going to be sold at the market. Looks like we're selling off into the close. IWM is our mechanical. That's fine. Oracle is fine. We have the order in to buy the overnight SPY trade. VIX definitely looked like it's going to confirm. I'm going to buy a 1/4 position of VIX here. All right, so we have 1 minute left. Yeah, I think we're okay. Going to be interesting on Amazon. These are 1 minute charts. So let's watch in this last 30 seconds. Look at this volume growing and growing and growing. I'm telling you, the majority of the trading comes during that last minute. Down, down. Oh. But look at that volume grow, everybody. Look at that volume grow in this last minute.
Order cancelled.
Okay.
Order filled.
So, where did we get filled? 22, 20. All right. So the new entry on VIX is here at 22.20. And we'll see if the third time's the charm here. CVS, we stayed in. It closed above. IBB was a stinker. We have to let that one go, but that's okay. Remember, small losses are allowed, everybody, and you have to congratulate yourself that you adhered to your plan. The plan was to get out. Okay, IWM, and then Oracle. Glad we did hit one profit target on Oracle today. At least it's a small victory. And then we bought SPY at
Order cancelled.
300 even. How about that? How about that? That's what my screen says. 300 even. All right. And that is it. So, listen, before I get to questions and answers, I do want to just put in a quick little plug, let you know that I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time via Skype. I've had really good success with my clients. I put a lot of energy into them. I really, really want them to succeed, so I teach them the best I can.
Order canceled.
I ask them a lot of questions. I throw everything back at them. I make them teach it back to me so I really know that they know it. So, if you've been thinking about a private lesson, my rates are in the description of this video, my email. You can also send me a message on Twitter. But it generally starts just with a quick phone call, just to get to know each other a little bit better. I want to know about your trading, how you got started, what your process is, what your challenges are, what your goals are, and then I'll put together a custom lesson plan to help you achieve those goals. Hopefully, right? That's the plan. But, you see me speaking here and trading during the day, which is good, definitely helpful. But one-on-one is always better with anything. So if it's of interest, please let me know. And then if you like this channel, please do me a favor and subscribe. And if you like today's video, if you learned something from today's video, please do me a favor, hit that thumbs up button. It does help Google get this channel out to more people. There's a lot of people out there that have a very difficult time with trading. It affects their life in a negative way, both emotionally and physically and certainly financially. And I know if they watch this channel every day, I know they're going to pick up some good habits, and I know it's going to help their trading. I mean, even if we could get them to break even, it would be a huge value, right? So, help me, help them, and hit the thumbs up button, and, maybe share it on social media, tell your trading friends about it. So, all right, enough of that. And let's get to some questions here. All right, so M86, I did go over McDonald's. Johnny says, seems like everything has sold lately over the third ATR channel ban has dropped, so I will be keeping that rule. Yeah, I mean, 90%, Johnny, of prices stay within under the third ATR channel and over the negative third ATR channel. I mean, 90%. So, I mean, sometimes it pokes its head up here, but then it usually doesn't stay, and then it got up here again. So, if I'm looking to buy something, if I have a nice signal down here at the third ATR channel, I feel like it puts the odds in my favor because most of the time it's going to go up from here. Not all the time, right? I mean, we need rules, we need triggers, things like that. But big picture, you have a tough time up here. So why be buying up here, right? That's where I'm going to be selling. If I'm short, this is where I'm going to be covering. If I'm buying, I want to buy here. If I want to short, I want to short up here. Shalin Dewan, hey, good to see you again. Thanks for coming back. I appreciate it. Anyone know how to get ATR bans on TradingView? Shalin, and I hope I'm pronouncing that correctly. Sorry if I'm not. But they're also known as Keltner channels, Keltner, Keltner channels. So I'm pretty sure that TradingView, is it TradingView? Yeah, that TradingView has that. But you're probably looking for ATR channels, and they're probably under Keltner channels. So, let me know if you can find that. But I've dealt with this in the past, and generally, if you look for Keltner channels, you'll find them. Murat says, NAIL has a very good setup. Can you look at it? Yes, sir. Well, Yesterday, it did have a good setup because we went higher, we came back down. We did kind of hold, not great, but we did have a nice V2 yesterday, right? Here's day one. Day two washed out day one. Day three closed above day one's close. This is a valid V2. And in addition, it poked its head outside of the channel and rejected. That's just an added bonus because, you know, this is one standard deviation from the midpoint. This is one standard deviation from the midpoint. There is going to be some inherent support here. And if you can reject it and go back up, that's good. Just like if we had rejected the 200-day moving average and went back up, that would be good. So, you know, the ATR channel is how I look at that. So yes, you do. I mean, you had day one, day two, day three. Day two certainly washed out day one. Day three certainly closed above day one. That would have been my entry point right there. And as you can see, that would have been a really good trade. I wouldn't be buying here though, because now we're right at that channel. Now the rubber band's starting to get pulled a little bit. You want to buy in here where you have room to move up to the third, right? So you've already given away about 1/3 of your easy move. So me personally, I would not be buying here. I would have bought here yesterday on this valid V2. Hope that helps, Murat. M86. Hi, Greg. I use TD Ameritrade for the moment, and it does not have ATR channels. It has ATR, but it's just a line. Do you have any suggestions of what other set I could use that works the same? Thanks. Okay, so the same as with Shalin. Look for Keltner channels. And as you can see, I use 6 sets of Keltner channels. I use the green here is 1, 2, 3, 4, 5, 6 to the upside, and 1, 2, 3, 4, 5, 6 to the downside. And I base them off the 20 days as far as the input value is 20 days. And so you're going to want 1 standard deviation, 20 days, 2 standard deviation, 20 days. But it's not real hard to put on there, and I'm sure they have it available. You know, you might want to call them, but again, instead of ATR channels, look for Keltner channels, and you want to put at least 3 positive Keltner channels above and 3 negative Keltner channels below. So I hope that makes sense. You know, if you have a problem with it, feel free to email me or send me a message on Twitter. But it's really, I wouldn't even know how to trade without Keltner channels. I mean, I would, but they really help. They're such a huge part of my trading. So look for Keltner channels. Murat says Keltner channels is the other name. Yeah, just what I said there. M86 says, thank you for your time. I have a baby. It takes me 3 hours to watch your videos. Well, thank you for taking the time to watch them while you have the baby, and congratulations on making them through. I hope they're helping. You know, in the description of this video, I have a link to 4 specific lessons, and they're totally free. One's about what indicators I use. One is about V1, V2 entries. The third one is about all the different entry signals that I use, and the fourth one's about how I phase out. But the 4 links are in the description. So if you get some more time with all your free time having a baby, I think those are the 4 most important lessons that I can offer someone. Jonathan, I just found this. Well, thanks for coming by, Jonathan. I appreciate it. It says, I'm a total beginner. What is volume? Well, volume is the amount of shares that are traded each day. So, you know, you might have one stock one day trade 1 million shares, and the next day maybe 500,000 shares. And volume is one of the indicators that we look at to see, was there a lot of volume, meaning were there a lot of votes? The higher the volume, the more votes people had. And so that is one indicator we use. And what platform am I using? I use Trade Navigator right up here. So I've been using this for over 20 years. It's really, really good. It has some features that I haven't seen on other platforms. You know, there is a fee for it. But you know, and there are other platforms out there, I believe, are less expensive, like stockcharts.com. TrendSpider is another new one that our friend Steve Burns likes. So there's a lot of different charting platforms out there, but specifically the one I use, the one I like the best is Trade Navigator. Santiago, Florida. Hey, what a great name. Thanks for the video. You are certainly welcome, Santiago, and thank you for coming by. I appreciate it. Scott Montgomery says, I can't see the screen very well. What is the ticker for VIX that you use? The ticker is VXX. Right there. I just put it into the chat, but it's VXX. Not VIX, VXX. Ooh, Murray said Amazon missed. Let's take a look. Let's take a look, everybody. So they're down about 28 points after hours, 1.46. So not too bad. I've seen that thing down 100 points. Scott Montgomery, M86 asked him how his puppy is doing. The puppy is doing great. Thank you for asking. Her name is Cooey. I've been raising her since she was 10 weeks old. I'm going to be raising her for 2 months until she finds her way over to Hawaii with her owner. There's some shots that she has to have here, and she has to have a certain amount of days after she's had the shots before they will allow her into Hawaii. It's kind of a big thing, but she's doing great. She grows every day. She is hell on wheels. I forgot how much work it is to raise a puppy. Oh my gosh. But she's great. I love her. It's really going to be hard for her to let her go. Jonathan says, what are the best platforms I can use to trade and analyze from my phone? Well, again, I think that stock charts would be good for your phone. I don't think Trade Navigator you can use on your phone. Honestly, when I think about analyzing charts on a phone, I can't even imagine it, to be honest with you. Like, I have a big screen so I can see everything well. But try to answer your question, Jonathan. Stock Charts does have have a mobile platform. Maybe someone else has an idea, but that would be my first guess, would be stockcharts.com. Scott Montgomery says, Roger that, thank you. You are certainly welcome. Oh, Google beat, huh? JT says Google beat. Let's see. Woohoo! They're up 7.5%. They're up 86 points now. Wow, wow, wow. That's amazing. That's amazing. But it doesn't look like Amazon did so hot tamale, huh? No, now they're down $36. So tale of two worlds here. Jonathan says, I do not have a computer and I'm doing what I can with Robinhood. Yeah, well, do the best you can. I mean, you can certainly do it from a phone. No doubt about it. But just make sure you can see it well enough. I think Robinhood has charts. I don't know how involved they are or all the features they have, but I do know for sure a lot of people use stockcharts.com and it's relatively inexpensive. I think you can get it for like $15 a month. But let me know how it goes, Jonathan, what you decide on. Let's take a look here. Intel beat. They're up they're up about 5% right now. So that's good. So it looks like the tech's doing pretty well. Let's see, is Oracle in on this? Is it at least helping? It's totally even after hours. All right. Thanks, Johnny. Appreciate it, buddy. I will go have a nice hike. So, all right. Well, listen, thank you everybody for coming by. I appreciate it. Go out and do something nice for somebody today. It's going to be good for you, and it might make their day, and they may make someone else's day. So, try to do something nice for someone every day. And if you have any other questions, you're welcome to email them to me or send them to me on Twitter. So I hope you liked today's video. Hope it helped. If it does, please hit that thumbs up button on your way out. And you're welcome, Scott. Thank you. Thanks for coming by. So thanks to Scott. Thanks to Johnny. Thanks to Jonathan for coming by. Appreciate that. JT, thank you, my friend. Murat, good seeing you. Santiago, Florida, best name ever. Thanks for coming by. Hope you come again. M86, thank you, ma'am. It's nice to have you come by, and good luck with the baby, and I hope you watch those videos. Shalinda 1, good seeing you. Thanks for coming back. Appreciate that. Stephen Burns, thank you as always, my friend. Murat, I think I mentioned Murat, but we'll mention him twice because he's so great. And Mount Doji, good seeing you. And Dr. Jorgensen, thank you for coming by. And William, thank you as always, William. So have a great rest of your day. And on the way out here, I'm going to have to play the disclaimer again. So hopefully see you tomorrow on Friday during the last hour of the market. Take care, everyone. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.